Welcome to CATEX-TV. My name is Frank Fortunato. This is a live broadcast coming from Princeton, New Jersey. Today is Wednesday, September 17th, 2008. It's 11:30 a.m. Eastern Daylight Time in the U.S. It's 4:30 p.m. in London. It's 12:30 p.m. in Bermuda and 9:30 in the morning in Mexico City. If you need to reach us during the broadcast, you can phone in toll-free at 1-866-67-CATEX. Overseas, our AOL instant mail address is CATEX-TV. We have a lot of news today, so this is going to be a little bit of a ad-lib kind of thing as my associates continue to give me more news. We have a couple of breaking stories. The first does pertain to the AIG situation. After AIG, after Fannie Mae and Freddie Mac and Bear Stearns, perhaps people are wondering where the U.S. government money is coming from. Bloomberg has this out on the wire about 10 minutes ago. The U.S. Treasury said that it will sell bills to allow the Federal Reserve to expand its balance sheet. The Treasury Department announced today the initiation of a temporary supplementary financing program at the request of the Federal Reserve. The program will consist of a series of T-bills apart from the Treasury's current borrowing program. Of course, yesterday the Federal Reserve announced an $85 billion loan to AIG. According to the Treasury, the new bill program will, quote, provide cash for use in the Federal Reserve's initiatives. That's one. And here's perhaps a bigger story. This could be the beginning of the chips in the wall. The London Stock Exchange said just about 5 minutes ago that it has in fact suspended trading of some exchange-traded securities that are backed by AIG. According to the, let me make sure I get this right, it has suspended trade of some ETF Securities Limited commodity products. ETF Securities Limited products are packaged securities based on commodity futures contracts underwritten by AIG. And, quote, they have been suspended pending clarification over what is happening with AIG, said the London Stock Exchange. Those that are backed by physical commodities, such as gold and oil, are continuing to be traded. The stock exchange is permitting that, but it has held up the trading of such derivatives or such contracts that are backed by AIG until they get further clarification on it. Finally, actually next to finally, regarding Lehman Brothers, the U.S. Trustee's Office has now finalized a 7-member creditor committee for the Lehman Brothers Holding bankruptcy case. The committee includes Wilmington Trust Company, Bank of New York Mellon, Shinsei Bank from Japan, Mizuno Corporation from Japan, the Royal Bank of Scotland Group, Metropolitan Life, and R.R. Donnelley Company. So we're finally getting some definition on that. And then finally, back to more pedestrian news, although if you were there you wouldn't think that. A moderate earthquake with a preliminary magnitude of 4.7 has shaken a province in eastern Turkey. There were no immediate reports of any damage. It occurred at 3:08 p.m. local time several hours ago. If we have any information on that during the program, we'll come back and tell you. We know we have viewers in Turkey, so we wanted to make sure we got that in. Now to our news. The Federal Reserve Board has indeed rescued American International Group. Last night, the Federal Reserve Board agreed to have the U.S. government take a 79.9% stake in AIG in exchange for the Federal Reserve Bank providing up to $85 billion in emergency financing. The 1/10 less than 80% stake might be to avoid triggering credit default swap instruments guaranteed by AIG, which would be then set off by a change of control. The Federal Reserve said that it has authority to intervene under sections of the Federal Reserve Act that date back to 1929 to approve this deal. They are proceeding with the full support of the Treasury Department. According to the Federal Reserve, they have determined that a disorderly failure of AIG could add to an already significant level of financial market fragility and lead to substantially higher borrowing costs. The Federal Reserve said the purpose of this liquidity facility is to assist AIG in meeting its obligations as they come due. The loan will facilitate a process under which AIG will sell certain of its businesses in an orderly manner. The AIG board, of course, approved this, AIG investors have been expressing confusion about whether the Fed really will be taking ownership of 79.9% or simply treating that percentage as collateral. That's now been resolved when the AIG board said in its statement that American taxpayers will receive a substantial majority ownership interest in AIG. They went on to say that the proceeds of the sales of its businesses should be enough for AIG to repay the loan in full. Here's the deal. The New York Fed credit facility has terms and conditions designed to protect the interests of the U.S. government and taxpayers. That's the overall mantra from the Federal Reserve Board itself. The facility has a 24-month term. It has an $85 billion maximum cap. It has a variable interest rate that will equal LIBOR plus 8.5 points. That would mean the initial interest rate would be over 11%. But AIG apparently would have to pay interest only on the amounts that it actually withdraws from the facility. The Fed says that the loan is collateralized by all of the assets of AIG and of its primary non-regulated subsidiaries. These assets include the stock of all of the regulated subsidiaries. The loan is expected to be repaid from the proceeds of the sale of the firm's assets. So in addition to getting the 79.9% equity interest, the government will now have the right to veto the payment of dividends to common and preferred shareholders. The government will also get veto power over important management decisions, such as sales of subsidiaries. The government has not yet decided whether the Federal Reserve or the Treasury Department will be in charge of appointing new management at AIG. For the moment, the AIG board will remain the same. Here's one thing that will not remain the same. AIG CEO Robert Willemstad has resigned. He will be replaced by the former Allstate CEO Edward Liddy. The 62-year-old Liddy has been the chairman at Allstate since 1999. He serves on the boards of Goldman Sachs and Boeing. According to media reports, Willemstad was forced out by U.S. Treasury Secretary Hank Paulson. The stock market is down now 345 points. Apparently what's happening, according to Bloomberg, is that interbank loans have completely dried up. More information on that is coming. Barclays has thrown a line to Lehman. They said this morning that they may pick up some of Lehman Brothers' assets and employees in Europe and Asia. This is on top of the British bank's deal to acquire key U.S. operations. Barclays is the third largest UK bank. It took advantage of Lehman's bankruptcy reorganization to reach a deal last night for Lehman's North American investment banking and trading operations for just $250 million US. Barclays also purchased Lehman's New York headquarters and 2 data centers in New Jersey for $1.5 billion. This is all subject to court approval. Barclays President Robert Diamond said in a conference call with analysts that the bank's interest was primarily in the U.S. cash equities business. He said it's an absolute machine. It's extremely profitable. We wouldn't want to miss the opportunity to add some of the talent from the UK and Europe to the team. He also indicated a possible interest in some assets in Asia. In an earlier statement, actually this morning, Barclays confirmed the deal and said that some of its shareholders had expressed interest in subscribing to at least $1 billion of additional equity to support this acquisition and to beef up Barclays' capital base. Pedestrian economic news, normally big. Home building in the U.S. has tumbled again during the month of August. And with the number of new building permits for single-family homes dropping 26%, the government estimates that this is a 26-year low now. So as a result, seasonal adjusted annual rates of 895,000 home starts is much weaker than the 955,000 rate that economists had been predicting. Building permits for single and multiple family dwellings fell 9% to a 26-year low of 854,000. The contagion spreads in Russia now. For the second day in a row, they've been having trouble with their stock exchange. Here's the story. Today, Russia poured $44 billion into its 3 biggest banks and halted stock trading for a second day in a row to stop the biggest financial crisis since its devaluation and debt default a decade ago. The finance ministry extended the repayment period for OAO Cyberbank